Hi, I'm Jim Epley, President of JD's Tax and Financial Solutions. Today I'm going to try to give you a little better explanation of the difference between an IRS lien and an IRS levy. I'll start out with the IRS lien. What that is simply a recording at the county in which a taxpayer lives. So let's say I live in Clark County, Nevada, and I owe $30,000 to the IRS. What will happen is the IRS will file a lien at Clark County, Nevada, stating that I owe $30,000 to them. And what happens is that goes to the credit bureaus, TransUnion, Experian, Equifax. They look at the county and see if you have a lien. So those three agencies, the credit reporting agencies, will pick up that lien, and therefore it'll show up on your credit report that you owe that $30,000 to them. It doesn't mean the IRS has taken any money out of your bank account. It doesn't mean the IRS has taken any of your wages. It doesn't mean the IRS has taken anything from you. All they're doing is recording a lien at the county in which you live. Now, it does affect your credit report, obviously, if it's going to be on there. It can also hinder you from buying a car, hinder you from buying a house. It could also hinder you from getting a job, because anybody that looks at your credit report will see that lien out there. It'll show up on there. So until you resolve that issue with the IRS, that lien will stay at the county recorder's office. Again, that's all a lien is a recording at the county office. So the only harm done is really on paper. The levy is another story. The levy is where the IRS is actually going to request money out of your bank account, request money out of your paycheck, request money out of your stock account. So let's take an example of a taxpayer owing $10,000 to the IRS and is not paying the IRS. The IRS will issue a levy to that taxpayer's bank. So if you bank with Bank of America and the IRS knows about that, they're going to issue a levy to Bank of America stating, John Doe owes us $10,000, please take it out of his bank account. The bank will take that money out of the bank account and will send it over to the IRS. It's very similar in the case of a wage garnishment. If you owe the IRS $10,000 and the IRS knows where you're working, they will issue a wage garnishment to your employer. So your employer by law has to take a certain amount of money out of your wages each check until that $10,000 is paid off. So that's how a levy works. IRS is actually getting money from you. Requesting it from somewhere else, obviously, but they're getting money from you. The lien, again, is just simply a recording at the county in which you live. So hopefully that clears it up a little bit for you. The lien and the levy are definitely two different things. Both are harmful to you. One on paper, one via money. So we can help you out with either situation. So thanks for listening, and give us a call if you need any help.